Hello, welcome back to Mining Network. We're at PDAC and I'm with Thomas Credland, the Head of Corporate Development over at Rupert Resources. Tom, welcome back.
Yeah, thanks, Peter. Love the show. Good to be here.
Thank you. Look, obviously this is quite a big day for you guys. You've just released, it's one announcement, but there's two big discoveries here. One, obviously, I'll let you guys tell the story, but obviously one, Heinä South, which is looking pretty exceptional in terms of grade, and then the other showing plunge extensions on Ikkari at depth. So, but before we go into all of that, why don't you just remind people who you are and what the company's up to, but then let's really dig into what these mean.
Yeah, sure. So Rupert Resources is a explorer developer based in the central Lapland greenstone belt of northern Finland. We made the Ikkari discovery in March 2020, so it's coming up to its 4-year anniversary. We went from 0 ounces to 4 million ounces within about 15 months, and then we followed up and we've taken that resource through to basically where it's 96% in the indicator category. So we've been able to sort of advance the project very quickly, move on to the sort of almost pre-feasibility stage. So it's a very large continuous ore body. So it looks like it's going to have pretty straightforward metallurgy. We're close to 5 kilometers away from tarmac road, 5 kilometers away from 220 kV power. So infrastructure is a real positive for the project. This winter, having really focused on the sort of the project elements of it for the last 2 years, we're back to exploration, which is it's a very young discovery, and so that's really the focus this winter.
Good. And I don't think it's an understatement to say this is probably one of the most exceptional discoveries of this cycle. We'd probably say, right? I mean, when you released the economic studies last year, you did a few different comparables with Ikkari as it stands at the moment, and on an NPV to cost basis and on lots of different metrics, Ikkari stood out as the best development project globally at the moment, undeveloped gold project. So I guess the main point at the moment is that you're at this point where you've got all of your ounces, essentially pretty much all of them, 96% up to indicated. What's left to do on Ikkari? Because I guess obviously you need to get that into a reserve eventually, but obviously, and this is where a lot of this step out and a lot of this more greenfield exploration is going on at the moment. But it seems like Ikkari in itself, that deposit, what more can be done to that as it stands?
I think as we de-risk the project, I mean, we showed in the PEA that the sort of terminal value for as Ikkari are close to $400 an ounce of NPV per ounce. And up to this point, our finding cost at Ikkari has probably been, actually the actual finding cost is probably in the sort of $5 to $10 range. If you include all the sort of sunk costs and the acquisition cost of the property, it's probably closer to $20 an ounce. But you're looking at a kind of 5-fold uplift on that cash spent to the kind of the sort of current valuation, which is about $100 an ounce, but then many multiples more in terms of what the project will eventually be worth. So, I mean, again, so that it's a sort of 2-track approach, which is to de-risk the ounces we have and take our, by doing that, we take the ounces we have from an evaluation of $100 for $400 an ounce, and then continue to top up our pipeline and our resource inventory at a kind of a, sub $20 cost.
And I guess for those looking at the project now, you've just released a hole today showing a depth extension to Ikkari. What does that mean? What does that mean for the deposit essentially?
Well, I think we haven't seen much incremental growth in the last 3 Ikkari resource statements, but really we've been doing that infill drilling and that project drilling, and Ikkari is still open in a number of directions, and I think that today's step out at Ikkari just shows that the ore body is open in that direction, at depth. But what was interesting about that hole was you did have some border zones, but you also had some higher grade material. So at that depth, you need to see higher grade zones, and that hole had that. The other hole in the release is from Heinä South. So again, that's 1 kilometre to the west of Ikkari, and that just shows the opportunity there is for satellite potential in very close proximity. I mean, the interesting thing about Heinä South, it's kind of, I would describe it as a sort of second generation exploration target. So everything up to this point has been discovered with, basically face of till following along on regional geophysics. So this was a target that was derived from our own geological interpretation and an updated geophysical survey. So it's a whole, if this is proof of concept for our new geological model and our new exploration model, and so I think it means that there's a lot more gold to be found in very close proximity to Ikkari if this actually comes together and becomes a satellite.
Good. And because obviously I think in the PEA you actually did include a little bit of Heinä in there already, but I guess what's the exploration potential at the moment? Because obviously you had that bonanza hole of like 1 kilogram over a couple of meters.
So I mean, all of these things, in Heinä Central, it wasn't actually included in the economic study. It was included as an inferred resource in the PEA. So I think often these satellites have slightly different metallurgy. I mean, the challenge is always to build tons to a point where you can start including them in economic studies. So the interesting thing we're seeing at Heinä South now is that we've always had sort of spotty, high grade zones, but it was always going to take a lot of drilling to get it to a resource potential. The interesting thing, if you're able to extend this, if you're able to follow up on this 16 grams over 25 meter hole, it means that you can start building tons. And once you have a resource, then you can start thinking about how that fits into the Ikkari mine plan. At the moment, we have 10 or 11 years of mine life, so to displace ore in that sort of time horizon, it either has to be higher grade or certainly open pittable at higher grades than the material we have already.
So this is mine life extension work that you're
This is mine life extension work, unless is of a higher grade than what we have already. But
16 grams over 25 meters suggests that there is a pretty
there's a high grade component there. We'll see how it comes together when we drill more holes. But we have 7 holes pending, so we'll see how that plays out over the next few weeks. But I think we've had we really started in earnest in terms of drilling some of the more advanced targets in January. So the sort of assay lab stuff still has to come dribble back from the assay lab. So I'm hopeful that we'll have some more to talk about in the next few weeks. But again, look, it's a very good start. I think the challenge always when you take on more risk, there's kind of there's obviously less certainty in how things are going to come off, which is why maybe it's taken us longer this winter to get to the interesting exploration results. But I'd say the next month is looking pretty good.
Yeah, but in a way, I feel like you're underselling it a little, because the latest drill hole suggests that you've found a structure that is extremely high grade over a decent width. So this.
Well, it could be, we could be talking about a structure which could be up to, 300 meters of strike. We don't fully understand it. It's one hole in space. We'll see how the other holes follow up. We know that the tenor of the system there is very good. We obviously had, a fortnight ago, we had a 500 grams over 2 meter intercept. So there's gold in the system there. We just need to sort of, what was interesting about some of the broader intercepts that were there in a host which could actually blow out and sort of produce sort of more of a, sort of more tons instead of having spotty high grade.
And with the current holes that are waiting to come back, are they all in around the same area? And I guess, is it too late in this drill season to go back and test this even further now that you've got the assay?
No, we have ongoing drilling there. So again, it's probably talking about a sort of the western extent of the Heinä South trend, which itself is a kilometre. So it's this 300 meters to the west of that in the total 1 kilometre strike. So again, that does have potential to potential to build tons. And then we don't understand really how if there's a plunge component, what it looks like underground. So I think the good thing about having something that grade is that you don't need a big strike to build ounces, because there may well be the grade will carry at depth.
Yeah. Okay. And so that's the current drill program. Maybe you could just tell me a little bit more about, because this is a big drill program for you guys. I think you're doing around 50,000 meters this winter. You're probably you're a little way through that now. But how many meters left potentially? What sort of?
Well, I don't want to get too caught up with meters. I mean, it's actually a 30,000 meter program this winter. But I think we're just starting to zero in on some of the more interesting targets. And so I wouldn't look at it in terms of meters. I look at the kind of the fact we're onto a structure. We've got reuse flow coming from both Ikkari and Heinä South. So, it's a two-pronged approach, and users coming back all the time.
And how much do you now really target Heinä South with the amount of rigs that you do have available? Does this become now the high priority for the rest of the winter drilling?
We always have to keep Ikkari moving forward. So I'd say, it's 50-50 in terms of resources to Heinä South and Ikkari at the moment. Both of those, deposits both need, it's only winter drilling anyway. So again, you have to split, allocate resources kind of fairly judiciously. But, once you're onto something, then, you can follow up. We've shown that we're very good at moving quickly, and actually remember also that they're still only drilling at relatively shallow depths, especially at Heinä South. So, you don't need to throw a lot of meters at it to expand the resource at this point. If the grade's good enough, then, you can get to an idea of what's there pretty quickly.
Okay, and you're talking about 50-50 with Ikkari. What's the remaining work or drilling at Ikkari? Is that more depth extensions?
Yeah, so I think that the thing there's always been lacking slightly is the depth extensions of Ikkari. So we're planning two deeper holes at Ikkari, so maybe sort of 200-300 meters lower than we've ever been there before. So really just trying to understand what the sort of deposit architecture is like a bit. And then as we've shown in today's release, there is potential to expand Ikkari, at sort of mineable, at depths which we're currently already considering in the sort of feasibility mine plan.
Okay, good. I know you get asked this all the time, and you must get tired of it. But obviously, with Agnico on the register, have you had any chats with them recently? How are they looking at Finland and Ikkari, and how's the relationship there currently?
Look, I mean, Agnico have been a great supporter of ours. They put money in about a month before the discovery in 2020, and we continue to have good dialogue with those guys. They've, for the first time in a while, they've started to really build out their regional program. So you'd have seen in January that they signed a deal with Firefox to look at some grounds, immediately adjacent to Ikkari in the north. So it's good to see those guys increasing their activity levels. They're a 15% shareholder of Rupert, so and they've been very supportive. They've participated in every equity raise you've done since they put their initial investment in. So I'd say we have a very good relationship with Agnico, and they're very straightforward to deal with. Does
that indicate that they are still pretty focused on Finland, and it is a jurisdiction, given that they are putting money into exploration in that region now?
Well, I think it's an Agnico region. I think if you listen to their presentations, they talk about trying to stay focused on areas which they can ultimately could produce 500,000 ounces each. So Ikkari, Central Lapland certainly has that potential, and they've obviously built a mine there, and they've built a very good operating team in Finland. So it makes sense for them to sort of either grow through their own organic exploration or to or through their investments in Rupert. So I think it is interesting. I think if you look at the map, the sort of land holdings map in the region now, there isn't much free ground anymore. You've got the majors looking for the sort of senior diversifieds looking for base metals deposits in the eastern part of the Central Lapland, and then you have Kinross, Agnico, B2, and Newmont through their investments in Orion. I guess invested looking for gold. So it's a very busy area at the moment.
Good. Okay. And what's obviously in parallel to the drilling? Obviously, when's the cutoff for the pre-feasibility study in terms of getting new resources into the ground, and when can we be expecting to see some updated economics around what you've been doing?
Well, I'd say we're looking to finalise the PFS over the course of this year, this calendar year. So in terms of what we've said before, is that one of the reasons for campaigning the infill drilling last year was that, to get as much as possible into the indicator category. So that you can only consider measured indicated resources in a PFS. So again, that was the focus there. But then as we drill more things off, then you can certainly include them as an inferred resource and an updated resource statement. And if they're good enough, then obviously they will demand to be included in the mine plan. So you can follow up. So we still have time to include new resources in our PFS. The main thing from a permitting perspective is to really look at the project scope, look at plant throughput, look at your discharge limits for water, look at how you're going to dispose of waste rock and tailings. Those are the areas that really the kind of the permitting authorities are really focused on. And so if you can sort of can define your scope well in your EIA documents, I think it does give you flexibility to bring other resources in over time.
Good. Okay. So even if you were to release a PFS and go down that permitting route, and you were then to find additional, because let's face it, there are plenty of targets within your license that you could potentially add resources in.
Well, I mean, I think it shows the importance of getting on with things early, knowing what's there. And I think, between ourselves and, some of the exploration that B2 are doing across the border, then, everyone's going to have a pretty good idea of what they have this year. But yeah, government is very focused on, mill size, discharge limits, the effects of having a mining operation in this area. So, again, if you have something, if you drill something out which is higher grade, which demands to be included in their mine plan, then obviously a high grade ore body is probably going to have less impact than mining something large and low grade. So,
how does the trade-off work with? Because obviously a lot of the large major companies now are talking about this 500,000 ounce per annum. If you guys, and I think most of the market would agree that there is more to be found within your license area, could you not then look at building Ikkari as a 500,000 ounce per annum project, and then assuming that there will be more ounces to go in there over time anyway, or is that irresponsible to look at it like that?
Well, I think it's a bit of a you have to do what the ore body wants you to do, and I think I think there's obviously a big focus on scale. I mean, I think people try and make their projects economic by capturing economies of scale. What you have at Ikkari is something which is 2 times the average open pit grade anyway. So, and look, it may be sort of tier 1 by the sort of narrow definition of 5 million ounces in resources and 500,000 ounces in production, but it has tier 1 cash flow. I mean, it's I think a lot of those sort of those strategies are based on the fact that you're going, often you're targeting something which is in a completely undeveloped area in a very challenging sort of geopolitical situation.
Yeah.
But we're in Northern Europe, so the kind of barrier, the kind of hurdle rate is probably a little bit lower in terms of, you have access to low cost, 100% renewable power. We're very close to infrastructure. You have a workforce based in two nearby towns who are, so you're not paying for expensive expats. So you have a lot of control. You have some control on your costs, and we'll optimize the project for the best cash flows. So we won't just take our resource and divide it by 10. That's a kind of that's a pretty lazy way of doing things. I think we'll look at what's the best projects, and look, we're in Northern Europe. We've got communities to think of. A longer life, low cost mine, which is generating cash flow and and paying wages for longer is probably something which is much more attractive to our community. So you have that in mind. But ultimately, if we think that kind of the scope that we've envisaged and the kind of the mill size is kind of is the best. It probably is the best outcome in terms of cash flow, in terms of sustainability, in terms of long term job prospects, and then we expect to add the resource over time. So we can have another decision later if we find something.
Yeah, good. Tom, thank you for the update.
Yeah, thank you, Peter. Cheers.